Good day, active trend traders. This is Dennis Wilburn. Welcome to this session of the Art and Science of Active Trend Trading Update. I'm recording this on October 14th, 2018. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Our motto of active trend trading is basically clarify, simplify it so everybody can continue to multiply their trading capital. I have basically developed a system focused on people who are still working for a living, but who want to learn how to trade, so at some point in the future they can replace their working wage with their trading wage. So what is Art and Science of Active Trend Trading all about? It's going to be a real quick snapshot. One of the things I want to do is get this down to where it's about 10 to 15 minutes, and then basically, but jam-packed with really great information for everybody to be aware of. I'll show you here. I am on at my desk, getting ready to go. Aloha, good morning, everybody. Yeah, or good afternoon, depending on where you're at. So, hey, let's get going with the rest of the session. Weekly update video to accompany the newsletter that comes out on the website. I cover a couple of things. One, market technicals. I look at potential bonus setups, other market driving events, and also try to cover at least one tech or mechanical tip. Today I want to talk a little bit just briefly about find the stocks holding up the market. Find the stocks that are holding up during a market sell-off. We had a pretty significant sell-off over the last couple of days. The slippage on the Russell was about 10%, so that's pretty healthy. So basically, I'm going to be looking for, okay, market sell-off, look for the strong. How can we do that? Well, one, look at existing watch lists. And I will just jump to my existing watch list, and I'll show you what that looks like. And I will show you what that looks like. Here we go. And then we'll pop that over here. Put that over there. And so let's go to here's one of my existing watch lists that I really like to do is I like the strong fundamentals. And this is a free watch list. It does come out on a website. And I'm looking for, okay, what is strong and what is not strong? Well, this strong fundamentals is the IBD 50 for this past weekend, or in other words, it came out on Friday. I go over here and I can sort here on a close below the 50. And as you can see, and I flip it up, and well, what stocks on the IBD 50 closed above the 50 period or 50-day EMA? Well, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 out of the 50 stocks closed above the 50. That tells me that the other 36 closed below the 50 in a lot of ways, meaning that, hey, we're in a downtrend. I picked up a couple of stocks off of this list. One is WRD. MTCH is a good one, and Wing, but WRD and Wing looked really good. And guess what else? Apple, Ulta. And then I'll go basically take that and say, okay, these are holding up above the 50. The markets themselves are closing down below the 50, below the 100, and in some cases below the 200-day moving average, showing the market's weakness. These are holding up. So then I can just focus on those. So that's watch for existing watch list. What's another area I can go to and look? Well, I can go back to, let me find it. It's basically the IBD. And just Apple leads 5 top stocks flexing strength amid the correction. I click on that, bingo, it takes me away to this, and it shows me 5 stocks. Apple, HCA, Wing. Wing showed up on my other list. Ross Dress for Less, and Callaway Golf, Eli. I remember trading Eli about, oh gosh, it must have been 20 years ago, and did really crappy trading it. So, but anyway, that gives me 5 other stocks. I can just sit there and go, okay, I'm looking for stocks that hold up well. I've got a announcement from a reputable investment newspaper, IBD, which I think is one of the best, and also my own research. So I can go either place. IBD, there you go. And when I look at this, if the market is in correction like it is right now, I'm looking to nibble a little bit. In other words, so I may cut my positions in half, simply because if I get a trigger, you never know which way it's going to go, but if I get a trigger, I can basically cut my position size in half. That way I avoid the big loss. And I want to start every trade with the end in mind. And so the end in mind at this point is, hey, let's take a look at what the end could be. Composite for, and this will be posted to our website, composite for the 12th. As you can see, looking on here, Wing shows up there also. BRD, this BRD, nope. But these were the stocks. This was another sign of weakness for me. As I sorted through all 13 watch lists for IBD, guess what? 2 of the watch lists had no stocks listed, which tells you, we are showing some weakness even there. Remind everybody where we're at. Okay, seasonality, crude, we're in the area where crude tends to do a pullback. The chart on crude would basically say, I maybe has gone as high as I want to go. Maybe time for a significant pullback into, and when I say significant, what is this? This is about maybe 8%. And so that could trigger me down to the downside. I am also looking for my seasonal reversal on Russell, which tends to happen somewhere mid-October to the last part of October, and let it run up from there. And before we look at a couple of charts, I'll just mention this really quickly. We are coming out with a new service, and it'll be announced in October. It's replacing our old service, the early warning alert service, and it corrects, basically, it basically removes some of the limitations that we had with the early warning alerts, allowing us to one, trade more, one, trade with less whipsaw, and the projection of being able to do secondary entries that will bolster our return. Backtesting showed really significant. This is the non-leverage ETF, but trading IWM ETF. Here was what EWA did, average about 14-15% per year. That's not bad, especially if you're trading the 3-time leverage. The MAPS, on the other hand, showed a few more trades, kept us out of the whipsaw trades, and generated about 25% average per year on IWM. So we recognize that, hey, it's not a promise that we're going to be able to meet the backtesting results, but certainly is worth taking a look at. So we're going to look at some charts, and we'll come back to this slide momentarily. So let's take a look at a couple of those stocks we were talking about. First, let's take a look at Qs. Qs has basically responded better than the other 2 tracking indexes that we trade. What I'm looking for with, I'll get a couple of boxes here. If we come back down here and, kind of, this is my box where I anticipate it to bounce around here, retest down in this area. If it doesn't retest down in there this week, what I'm expecting is a move back up into the stronger moving averages and or the 100-day moving average, which is there, and then a pullback to retest. So we've had a thrust down. We're in the process of a potential reaction up, and then anticipate a thrust down. If we break through the bottom of this, where are we going? We're probably going down to the 160 or even down to the 165 level. So that's the Qs. Some of the stocks that, other stocks that we're looking at, and this is just for, somebody brought up this stock. What happened? Somebody brought up this stock just to keep your eye on. I mean, if you want to, a very interesting looking chart with a lot of interest. And it's just early on, and it's kind of like it's big move. This is a marijuana, this medical marijuana stock. I don't know. I'm just keeping my eye on it. I mean, it's got a really interesting looking pattern here, a nice asymmetric or symmetric triangle. It could basically, if it is popping back up into a uptrend, okay, my volume hasn't kicked in yet, but it's really excellent looking pattern. if I were going to try to trade this, I would basically go somewhere between the 820 combo EMA on the daily chart and the 34. If it drops to 50, I'm gone until and wait for a new setup. That's that one. Some of the other ones we're looking at. Let's look at those 5 stocks that were brought up by IBD. Eli. Well, Eli is, of course, a is it interesting enough to trade? Well, from high to low, we're talking about about 7% move. So not a huge move. This year, how far has Eli moved? It's moved from here to here, about 77%. That's that's not bad for a stock. It is giving us a nice pullback into the moving averages, and there's reacted from that. TSI has turned up. Looks kind of interesting. Again, Eli. Look at we can pick it up off the 34, or even just a breakout above the 23. And if it fell back down below the 50, we're still within a 5%, which is stop loss, which is great. Eli, ROST, Rust. I know one of the gentlemen who does the renovations for the Ross stores throughout the Pacific. And also looking pretty good. It held on to the 50. Excellent looking chart for, TSI weekly. Looks like it wants to pull back, but where might it pull back to? Well, take a look at basically past highs or where it did breakout. So it pulled, look for a pullback into 87. Utilize what's happened before to identify the zones and levels where it might happen again. That's, basically the essence of technical trading in a nutshell. Again, Wing. I really kind of like Wing. Ones at 67.90-ish. That would be bouncing off the 20-day moving average again. And it has done that, or down here, we could bounce all the way back down to the 8-period moving average, which equates to approximately the 34 or the 50. So somewhere in there, really nice. If we took a trade approximately there, drop down here. Again, about a 5.49% loss if it drops down below the 50. So Wing, I'll throw in HCA. HCA, again, holding above the 50. That's the critical. If the market gets a bid, where's it probably going to go? It's probably going to go higher. So from it put in a really nice bullish harami off of last week's, off of Thursday's candlestick. Looks a little bit toppy on the weekly chart, but good strong support there. Where at the 130 level, just slightly below the 50. So at this point, no reversal signal yet. TSI hasn't jumped in yet. And then our other surprising stock is AAPL. Apple. Now, I am not a big proponent of Apple. However, I have to also realize that Apple is a big mover. And so, not a big mover so much anymore as it's a popular stock. Well, what's it doing? Well, Apple, it held the 50, it dropped to 50, regained the 50, regained the other moving averages. Great. However, when I looked at Apple and drew out this pattern, what am I seeing? Now, on this is a daily chart. Here's a weekly chart. I'm seeing an expanded or a triangle or a megaphone type pattern. Those tend to, that has been categorized as a bearish or a weak pattern. And so, but at the same time, though, the expansion of the megaphone at some point is going to drop, either break out the top or break out the bottom. And that's the essence of that, but that's considered a weaker pattern. And last but not least, just WRD. WRD, again, holding up very nicely. It just turned back out of a downtrend that was started back in June of this year. And so, what would it take to get, and it has just done a pullback, first pullback into the moving averages, getting a reaction. What's the volume doing? Buyers aren't just, really swooping in and buying it up, but it still looks pretty good. I mean, where might we want to buy this? Well, about 23. 23 to, let's say, 22.80-ish. We can put a little trade on there. And then where would we, if we got in there, where would we want to get out? Well, if it drops back below the 100-day moving average, or the 34, the 50, and the 100, or 100-day moving average, that's where we want to kind of get out of this trade, and then wait for a new setup. That's basically it. Because look at it here, it's got some support right here, and I'm going to show this to you, and then we're going to basically call it a day. It has support based off this hold high, because this was the breakout there. So where does that high? So we broke out there about the 21.87 level. So about 21.87, that high was 21.86. Not bad for eyeballing it. So again, anywhere down there around the 22 to down to that level. So basically, we got a breakout. We're coming back and retesting, basing right here. Would I call this a cup and handle type pattern? Not quite, not in the classical form, but it definitely is a drop down, attempted rally. Now, the other way you can look at this, you may look at this and say, well, that's an attempted rally, but it's failing to get back up to all the way back up to its past highs. If this rally fails, then I think we're back into a scenario of heading down to the downside. So that's it for today. I tell you what, I'm going to be doing this type of a video normally about every weekend, so that you can be aware of what's going on in the market. I'll be covering 3, 4, 5 stocks. I will identify levels and zones where you can take action. Please send me an email. Please also, if you like this video, please like it when it's posted up to the YouTube channel and also on my webpage, just to let folks know that, hey, I'm showing some really good technical analysis of where to take action on these entities. And so with that, as I said, what did I say? No. Okay, as always, trade wisely, trade profitably, and remember, take time to enjoy the journey, like I did this past week with with my little granddaughter and grandson, the ones that live in Boise, and we were at Hanauma Bay. And you certainly can't dress like this in Boise right now, this time of year. So God bless everybody. Have a great rest of your weekend, and thanks for stopping by to watch what's going on with the active trend trading. Aloha. God bless.